Okay, so Tesla has been raising prices, but that hasn't seemed to dent demand for its electric cars. That just shows how much customers love Tesla vehicles. So today we're going to analyze Tesla's first quarter earnings and find out how customers and investors reacted to the price increment. Stay tuned. But before we begin, please support us by hitting the like, share, and subscribe buttons. Thanks a lot. We really appreciate your support. Now, despite the firm facing higher costs, profits at Elon Musk's electric car company soared to $3.3 billion in the first 3 months of the year, as customers proved willing to pay more. The firm's deliveries were up 68% and would have been higher if not for supply chain shortages. Its Shanghai factory was also recently forced to shut down due to COVID restrictions. As the plant reopens this month, staff will be required to sleep at the factory in an effort to avoid further lockdowns. Tesla said as it shared quarterly results with investors that although limited production has recently restarted, the firm continues to monitor the situation closely. Tesla has been pushing to expand with the opening of new factories in Texas and Germany in recent weeks. The firm delivered more than 310,000 cars in the first 3 months of the year, and in a conference call, Chief Executive Elon Musk predicted the company would produce 60% more cars during the year as a whole compared to last year. Tesla doesn't advertise its products but attracts frequent headlines, often related to controversial comments made by Elon Musk. But the firm said that it had also seen spikes in orders following increased marketing from rival electric car makers. Musk and Tesla expect to mass produce a robotaxi with no steering wheel or pedals by 2024. While Tesla shares rose more than 5% in after-hours trade following the strong results, some investors worry Musk may be distracted from his focus on the electric car maker as it expands. Musk, who's known for his sometimes erratic musings on Twitter, recently made an unsolicited offer to buy the social media platform for $43 billion. Musk has gotten a huge amount of attention in recent weeks due to his bid to buy Twitter and take it private. There have been some concerns voiced whether Musk, who is already CEO of SpaceX, as well as Tesla, has the time to take a role overseeing Twitter if he's successful in buying it. But Musk's bid for Twitter didn't come up during the investors' call. Maybe it was because the 9.2% he now owns is described as a passive stake, although those who know Musk don't expect it to stay that way for long. His first move was to launch a poll asking whether people want an edit button, something long called for and perhaps something he personally needs. The new announcement that he'll join Twitter's board comes as no surprise. While Musk's 9.2% stake in the social media company may sound small, but Dan Ives from analyst firm Wedbush describes it as eye-popping, equating to 73.5 million shares in the social network. Shares in the platform soared following the revelation that the Tesla founder had become the largest shareholder in the company, meaning that stake has already grown in value and is now worth more than $3 billion. Musk's shareholding is 4 times greater than that of Twitter founder Jack Dorsey, who stepped down as chief executive in November. Dan Ives believes the entrepreneur now has his eyes laser set on Twitter, and his significant holding will see him push for an active role in the management of the company. Perhaps that's why Tesla fans and investors are worried that Elon Musk could be distracted from his Tesla performance goals. For those with shares in Musk's many other businesses like SpaceX, Tesla, Neuralink, and The Boring Company, there will doubtless be a sigh of relief that he didn't go down the same route as Donald Trump. But there will also be concerns that he has yet another passion project to distract him from the serious business of running his established firms. And things just keep getting interesting for Elon Musk and Tesla. Be sure to keep watching as we talk about what the record earnings mean for Elon Musk's compensation bonus. So Elon Musk is set to collect a $23 billion bonus after the Californian electric car company's first quarter results exceeded performance targets. Musk, who's already sitting on an estimated fortune of more than $260 billion, is in line for the bonus share payout after Tesla hit share price and financial growth milestones in its earnings on April the 20th. Tesla made an adjusted profit of $5 billion on revenue and $18.8 billion in the first quarter of the year, which represents an 81% increase on the same period a year earlier. The results combined with the growth in Tesla's share price performance mean Musk has hit targets that should lead to a bonus share payout worth about $23 billion. The company outlined an extraordinary deal for Musk in 2018, that would pay him an unprecedented $55.8 billion bonus if he built the business into a $650 billion company within a decade. He achieved that milestone early in January of 2020. Tesla today has a market value of $1.1 trillion, following a 1,300% rise in its share price since the target was set in January 2018. It means Musk, who earns no salary, should now have unlocked the final three parts of the 12-tranche bonus scheme. Each tranche gives Musk the right to buy 8.4 million Tesla shares at $70, which is a huge discount on the current $977 share price. His profit on each tranche could be $7.7 billion, or a combined value of $23 billion. The payments need to be signed off by the board, and he must hold on to the shares for 5 years before selling. Musk said he wasn't in talks with Tesla's board over a new bonus scheme after completing the 2018 deal early. During the company's earnings call, Musk said that there are no discussions underway about incremental compensation for him. The accomplished CEO is very excited and optimistic about Tesla's future, and he has been sharing his excitement with the Tesla investors. Musk told investors on the investor conference call that we will see record output per year from Tesla's factory in Shanghai this quarter, although the first is missing a couple of weeks. Musk took time to thank suppliers who he said have really worked day and night to ensure that Tesla is able to keep the factories running. And he said the company should be able to produce 1.5 million vehicles this year, a bit better than a 50% increase from its 2021 output. He said he believes the company should be able to continue its 50% annual growth rate for the foreseeable future, for basically several of the next years. Musk also defended recent price increases for its cars. Tesla's cheapest car, a Model 3, now costs $46,990, up 34% from 3 years ago. Musk said Tesla must raise its prices in the face of higher raw material costs. He said it may seem like maybe Tesla is being unreasonable about increasing the prices of its vehicles, given that the firm had record profitability this quarter. But the wait list for its vehicles is quite long, and some of the vehicles that people will order, the wait list extends into next year. So Tesla's prices of vehicles ordered now are really anticipating supplier and logistics cost growth that the firm is aware of and believe will happen over the next 6 to 12 months. Well, Dan Ives said that Tesla's results are particularly impressive given the current supply chain problems. Supply chain problems, most notably a shortage of computer chips, has led to cuts in production worldwide at virtually all automakers. That's led to tight supplies of vehicles and record high prices for car buyers. Most automakers sell their cars through a network of dealers who are independent businesses and who profit from buyers paying above the manufacturer's suggested retail price, or what's known as sticker price. But Tesla sells its cars only in company-owned stores, putting it in a better position to profit from the higher prices it gets for its cars. What do you think about Tesla's first quarter earnings? Do you think the firm will post even better results despite the supply chain setbacks? Please let us know via the comments section. If you enjoyed this video, please hit the notification bell for updates on more videos like this. Many thanks, and we'll see you next time.